Hey there, fellow business owners. I'm Camilo Toro, and today we're diving into the world of sales tax. We'll talk about what is HST, what are taxable and zero rated supplies, what are the benefits of registering for HST, and how to register for HST. So grab your calculators and let's get started. So first, what is HST? HST stands for Harmonized Sales Tax. It is a combined sales tax that includes both the federal goods and service tax, or GST, and the provincial sales tax in certain provinces in Canada. Provinces that have implemented HST are Ontario, New Brunswick, Newfoundland, Labrador, Nova Scotia, and Prince Edward Island. HST was created to streamline the taxation system so that instead of separate GST and provincial sales taxes, businesses in these provinces only collect and remit a single HST amount on taxable supplies. It is worth noting that some goods and services may be exempt or zero rated under HST, and these are two different things. But both of these things mean that they are not subject to the tax or are taxed at a 0% rate. So what is the difference between zero-rated and exempt supplies before we go forward? Zero-rated supplies refer to goods and services that are taxable, but the tax rate that is applied is 0%. That means that although the tax is technically charged on these supplies, the tax amount is zero. Examples of zero-rated supplies in Canada include basic groceries, prescription drugs, medical devices, exports, and some agricultural products. Even though no tax is collected on these supplies, the businesses that engaged with these supplies can still claim input tax credit to recover the tax that they paid on inputs related to zero-rated supplies. On the other hand, exempt supplies are goods and services that are not subject to tax at all, and they are fully exempt from GST and HST. It means that no tax is charged or collected, and as a result, businesses cannot claim input tax credits, which we're going to talk about later, for expenses related to exempt supplies. Examples of exempt supplies in Canada include most healthcare services provided by medical professionals, certain educational services, some financial services like residential mortgages. The key difference between zero-rated and exempt supplies lies in the ability to claim input tax credit. With zero-rated supplies, businesses can recover the tax paid on inputs, while with exempt supplies, no tax is collected or recoverable on input. And number 3, what are the requirements for registering for HST? You as a business have to register for GST or HST if both of these situations apply. Number 1, you make taxable sales, leases, or other supplies in Canada. Number 2, you are not a small supplier, and you are considered a small supplier by the CRA if your business makes sales of less than $30,000 in a single calendar quarter or over the previous 4 calendar quarters. It's important to note that this threshold may be subject to change, so it's always advisable to check the latest information from CRA or consult with a tax professional. There is an exception on the threshold for small suppliers. Taxi and Uber drivers must register for the GST HST even if their income is less than $30,000. And it's important to note that these registrants must charge, collect, and remit HST to the government. Number 4, what are the benefits of registering for HST? The first benefit is one of input tax credits, or ITCs. This is one of the key benefits of registering for HST. As a registered business, you can recover the HST paid on your business expenses, like equipment, supplies, and services. This helps reduce your overall tax burden and improves your cash flow. An example of this would be that during your fiscal period, you collected $1,000 in sales taxes, GST and HST from your clients. But you are also eligible to claim ITCs or input tax credits for $800 of HST and GST that you paid on business expenses. If you have no adjustments to include on your return for the reporting period, your net tax to remit to the government would be $200. Benefit number 2 for registering for HST is credibility and professionalism. Registering for HST can enhance the credibility and professionalism of your small business. It demonstrates that you are operating as a legitimate business entity and you're complying with tax regulations. This could be especially beneficial when you're dealing with larger businesses or government entities that may require HST registration for procurement or contract purposes. Benefit number 3 of registering for HST is temporary cash flow. There is a temporary cash flow advantage that arises from the timing difference between the time that you collect HST from your customers and the time that you have to pay the net HST to the government. If you collect more HST than you pay, you will owe the government the net HST tax, but until the reporting period is due. So you may have some cash flow relief in the meantime, but be careful as the cash belongs to the government. Benefit number 4 of registering for HST is compliance with regulations. When you register for HST, it ensures that you comply with all tax regulations and you can avoid penalties or legal issues. You don't have to worry about the $30,000 threshold and you can be at ease that you're compliant. Remember, it's important to consult with a tax professional or accountant to determine your specific situation and benefits for registration for HST in your particular business. A personal tax advisor can provide personalized advice based on your circumstances and help you make informed decisions regarding sales tax registration and compliance. Item number 5 is how to register for the HST. You can register your GST HST on the CRA website. Generally, you will need to register for your business number before you can register for the GST HST account. You may register for a BN or business number by using the online service at Business Registration Online or BRO. This is the quickest way to register for a BN. Once you have obtained your BN, you can then continue in the same session to register for a GST HST account, which is also called an RT account. If you're unsure, you can also call 1-800-959-5525. The CRA will ask you the type of business and the estimated annual revenue, and you will also be able to choose the GST HST reporting period and year end. The reporting period can be annual, quarterly, or monthly, and the year end can be December 31st or the same as the corporation's year end. Normally, we recommend our clients choose annual reporting to reduce workload if they can. Item number 6 is when to file for HST. And it's important to note that you must file for a GST HST return even if you have no business transactions and no net tax to remit, as long as you have a registration number. Deadlines for businesses would depend on your sales volume. For businesses that have sales less than $1.5 million, can choose annual or quarterly filing. If a business has sales between $1.5 million and $6 million a year, these businesses can choose monthly or quarterly filings. And for businesses that have over $6 billion in sales, must file monthly. The deadlines are dependent on the fiscal dates of business. For example, if your fiscal year end is December 31st, your first quarterly due date for filing would be March 31st. And that's it for today's video. If you find this information helpful, give it a thumbs up, subscribe to our channel for more useful content, and don't forget to hit that notification bell so you never miss a video. Thanks for watching and happy HST registering.